Morning, everybody. It's the 29th of April. We are Signal Centre Talking Ball. I am Joe Neighbour and I'm joined by Steve O'Hare. Good morning, Steve.
Good morning, mate. All right?
Yeah, not bad. Thanks, you?
Yes, not too bad. Nice and sunny out there, so I'm happy.
Yes, indeed. Did you see the football yesterday?
No, I didn't. I really couldn't be bothered to watch it, to be honest.
It's a humdinger of a match.
Was it? Was it good?
Yeah, really good. Yeah,
I mean, Man City are pretty awesome, aren't they? I mean, I think it
they
was
are.
first half to PSG, second half to Man City, was it?
Yeah, pretty much. PSG
Yeah.
sort of fell apart in the second half, but all of which is obviously a starter for the main event, which is tonight, Europa League
Yeah,
semi-final.
exactly. Come on, get in there.
Some sort of excitement in what's
Yeah.
otherwise been a pretty shite season. But yeah, cool. Anyway, get off that. Let's get onto the market. So yesterday we had Apple reporting quarterly revenues that smashed Wall Street expectations. That was fueled by sales of 5G iPhones and the purchases of iPads and Macs during lockdown. The company's new 90 billion share buyback authorization makes the 50 billion announced by Google just a day previous look like loose change. The stock lifted about 2% after hours and lifting Nasdaq futures in the process, as you'd expect. There was also a 6% surge for Facebook as WhatsApp and Instagram owner reported a jump in active users and advertising sales. So all good on the tech front. We also had
those apples.
Yeah, indeed. We had Federal Reserve upgraded their assessment of the American economy yesterday, but said it's not ready to consider scaling back stimulus. So, continuation of the dovish theme from Jay Powell. What else have we got going on? Another monster day of earnings today. We've got NatWest and Nordea in the UK, as well as food giant Unilever and oil firm Shell. We've also got today in the US, Amazon and Twitter reporting. So more going on. And also we had Samsung overnight as well. They managed to beat expectations, although the manufacturer did warn of chip shortages going forward. So all pretty rosy. What's that done to the equity market, Steve? Have you got any take on those this morning?
Yeah, it's just up blue skies, new highs, isn't it? Really. Saying that, look at that. Yeah, it all looked pretty a little while ago, obviously for the FTSE, but obviously it's respecting a little bit of this upward trending resistance line, and we can see if we go all the way back here, we've got previous resistance coming in just above the 7,000 level. 7,000 for me is always acts as a bit of a psychological level. Sorry, not just 7,000, any sort of like 1,000 with a 000 on the end. Normally find that traders respect them sort of levels. But obviously, yeah, bit of a shooting star candle forming there, which isn't very positive indeed. So we've got 15 minutes left to the end of that. Again, is it maybe potentially for my gun to head challenge to sell FTSE? I've seemed to have got away with it the last couple of days. Overall, the price has gone up. But,
did you get away with it yesterday?
I don't know. It was close. It was close.
I got it exactly on your level.
Oh, really? So
yeah, the high of the day.
Flat, but obviously you have to take costs into consideration.
No, it was the highest level of the day was where your stop loss was, exactly. On my chart, I don't know if that's the same on yours. So your stop was, let's have a look.
80 something, 80.
Yeah, 69, 87.8.
And what was the high of the day?
69, 87.8.
Okay, well mine is stop bid, so obviously that didn't go bid at that level. So maybe I did get stopped out. Let's I'll see how. Yeah, I mean that's obviously stopped. So I'm giving up. I'm not going to give any more information away now.
Yeah,
if we look at DAX, we've got again. We're seeing that sort of like in this 4-hour period, we're seeing as a bit of a sort of like correction and a bit of a stalling in around about where we think a possible or potential right shoulder may be. Obviously, we're always looking for head and shoulders formations, and anything like this. could be forming on the DAX. Obviously, we really don't need to take any sort of notice of this until we get a break of the neckline. And in saying a neckline, I would consider a break of 15,073 a clear break of the neckline. Looking across to the Dow, obviously had a bit of a revisit towards all-time highs, but sort of stalling a little bit. We've still got this, the momentum seems to be slowing down as we have higher price action. So there's lots of bearish divergence. So again, although we've seen these like spikes up, I'm not entirely convinced by it. It feels like a bit of a grind higher, but I can't wait for the sort of like the catalyst, whatever it may be, to sort of like reverse these markets. It will be blood on the streets. We might need some surgical procedures to get our way out of that. That's a little hint of something to come. So that's pretty much it. Again, I do like to look at how China's performing, because I believe this is we're going to see this sort of price action across all indices eventually, where the gains are eventually given up, and there is a catalyst to sort of bring it lower. So for me, the China is the leading indicator for these indices. Sorry to dampen the fire of all the stock bulls. Looking at commodities, pretty interesting levels we're trading at. We've had a really decent rally up in the recent short term. We talked about this yesterday, the break above this double bottom, this short-term double bottom, and it has actually achieved the measured move target. Also got up and pierced the previous swing high, which again is good, but the reaction, obviously, it left a shooting star. So maybe that's telling us that it's getting a bit tired up here and ready for a bit of a correction backwards. So that 64.33 level is still decent resistance at the moment. A break of that, and I'd expect a move of another couple of dollars higher towards 66.41. However, currently we're within this short-term range, and so it is favored for a correction lower. Gold. Always believe in your whatever it is. Yeah, we reacted higher again yesterday. We talked about the 1763.71 level, and price action got down there, pierced it, broke it, and formed a bullish hammer. So this resulted in a Morningstar formation. Also now really looking at the potential for a double in this trend higher. It's not a great double bottom, because obviously it's in the middle of the move higher, but we should still see the same sort of reaction if we do get a push. The real double bottom is here. We can see, oh, nice and green. I like that. Here's the real double bottom here. That has a projected move towards 1835. So that's still on the cards. And obviously on the short term, we're getting the same sort of effect. Break of the neckline here would lead to a measured move target, and we take the base up to the neckline and project it forward. So again, that takes us up to the 1830 level. So, you know, I was quite impressed by how gold recovered yesterday. Should really have gone with that instead, shouldn't I, instead of the FTSE? Hey ho, that's hindsight trading for you. Copper again leading the way higher after the break of 436.50. There ain't no stopping us now. There we go.
Well, it's been quite a sing-song today, isn't it?
It has, hasn't it? Yeah, you like that, do you?
I love it, yeah. Brighten the mood. It's amazing what a bit of sunshine does to Mr. O'Hare.
Yeah, exactly. Yeah, so
okay.
The only other thing I haven't mentioned, I suppose, is cryptocurrency. Could have a quick look at Bitcoin, see how that's doing. That's sort of after the big sell-off we all talked about. It's had a nice, decent rally higher, but it's
roll
stalled.
over on that oscillator.
Yeah, it's stalled pretty much in front of the resistance that we picked up, 57,500, stalled way in front of that, and looking a little bit peaky.
Cool. All right, Steve, thank you. Let's get over to currencies then. So first up, dollar index. Yesterday I was crowing about the fact that dollar index may be about to break out of this narrow channel that you can see here. We were up here at the start of yesterday, but reversed all of that. Pretty large engulfing candle, really, bit of an outside candle formed there. But what we have here is this blue line is a 78.6% fib level from this low here, swing low on the 25th of February, to this swing high here on the 31st of March. So as it stands, we have breached that level and we seem to have found some buying support. So a little bit of interest there. That's also coming roughly in line with this sequence of higher lows. So is that going to be where the dollar bulls think this is enough and they're going to try and drive it higher? Remains to be seen. I mean, clearly the overall trend remains bearish and we're trapped within this bearish channel. So while that's the case, you've got to fancy selling rallies. But at some point, this channel is going to break, and I think there'll be a decent-ish reaction to the upside, which will be bullish for US dollar. If we look at what's happening as a result of this move, first up on euro dollar, obviously the inverse of the dollar index, as we often say. This is a trend here of lower highs. We've also got some resistance here that I've drawn on at 121.56, and we have formed what is potentially a bit of a shooting star candle. It's very early in the session to be calling that at this moment in time, but it's something to keep an eye on, because if we get again a break of this narrow channel, then that could lead to a reasonable correction to the downside. Elsewhere, not much bearishness on the Aussie pairs. They're all looking pretty rosy indeed. Aussie yen breaking out of this wedge to the upside, so it looks like this is a continuation pattern and we're going to see higher prices. Next step there is 85.45, which is the previous highs that we posted on the 18th of March. Euro sterling still waiting for a breach of this 87.19 level. We've seen a little bit of a pullback and engulfing yesterday's price action today so far, so keeping a watching eye on that. If we can break above this 87.19, then I think we will have completed an inverse head and shoulders bottom, and we'll be targeting moves over the medium term up to 89.66. So still watching on that. It's only a potential setup until it breaks this neckline, but it is pretty close, so we'll have to wait and see what happens. Dollar CAD, not looking great on this. I mean, this was a big old wedge pattern that I had drawn on the chart, which goes back some way. Where is this? March, probably? Yeah, March last year. So I was looking for a break up above this resistance at 126.44 to potentially spark a corrective move higher to this 38.2% fib level. That is now invalid because it was based on this low here, which has now been breached. So we're making new lows on dollar CAD. And no sign of that slowing. So it'll be a case of looking to sell into rallies towards 24.00 on that one as an opportunity to sell. Dollar Swiss, not much going on there. Again, an engulfing candle posted yesterday. A little bit of a bounce today, but not much going on there. Probably need to have a play around with that one and redraw my levels. Dollar yen, quite interesting, because we've had this pullback to this 38.2% level, although we saw a bit of selling yesterday and a slight increase in volume as well, I might add. We are pushing higher today. So if you are interested in US dollar and think that it is due a corrective bounce, then I think the best place to be looking to play that remains to be dollar yen, due to the yen weakness that is still very present in that market. That pretty much wraps it up for me. I think it was probably cable was the only one I didn't look at, but I don't think there's much going on there. So break of the channel continues to test the underside of this channel, but in the short term trading in this range between 136.70 to 140.00. So while we're remaining within this range, I think opportunities are quite limited, to be totally honest. If we can break above this level at 140.00, then we should be looking for a move back up to these highs that we posted in February at 142.41. So that's the FX roundup from me. Go to the head challenge from yesterday, as we alluded to. Steve was stopped on his trade yesterday by the narrowest of margins, and I was stopped out on the euro sterling idea, trying to preempt the break of that inverse head and shoulders, which never came. So a couple of losses yesterday. Form's been a bit better in recent weeks, so it's likely that we were going to get some stop outs at some point. Steve, have you got an idea ready for today?
Yeah, I'm going to go for oil, and I'm going to looking at these 4-hour candles and looking a little bit bearish. So it's a decent risk reward trade. That's what I'm going to say. I'm not going to stake my life on it, because it is just a trade and that's it. Let's work out where the stop's going to be. We're getting short at 64.10. Sorry, 64.12. The black line, the black number. Have quite a tight stop. 64.42. Sorry, 64.42. Very, very tight stop. But we can go for it on this. 60. I like round numbers. 7-to-1 risk reward. So it's a 7-to-1 shot. So
Wow.
if you're in the bookies, a 7-to-1 shot, it's not sort of like favourite. So consider that. Yeah, I'm risking 30 pips on an oil trade, getting short at 64.12, stopping out 64.42, targeting 62.02. That's where I roll. That's the way I roll, isn't it, Joe?
It is. Good luck, mate.
Very high risk. Don't do it. This is not investment advice. Don't copy this trade idea.
Nice disclaimer. I'm going to take a look at dollar yen just because I think there may be some scope for a bit of dollar strength today, but I've said that for a while now and keep getting egg on my face. But this is dollar yen. I think if you are going to play dollar, this is the best place to go. As you can see, we're trading in a decent-ish short-term uptrend. Some positive candles been posted in the last few sessions. We are higher today by 0.3% already, so looking for a continuation higher on that one today. So look at the intraday charts. I'm going to target a move up to that round number there, 110.00. Currently trading at 108.89. Stop loss quite tight at 108.53. Ideally, it would be below the lows that were posted this morning, but in order to keep the risk reward attractive, I'm going to do the stop at 108.53. And again, that target at 110.00. So looking for 3.1R on that one today. As we've mentioned, there's plenty to move the markets today. So just go through what to expect in the session ahead. Obviously, we've got earnings from Amazon and Twitter, so they'll obviously be keenly watched. We've just had some unemployment data out from Germany. At 1 p.m, we've got German CPI. Prices expect to rise to 1.8% year on year and 0.5% month on month. At 1:30, we've got two lots of data from the US. Most importantly, US GDP, which is the Q1 first reading. GDP to grow 5.7% quarter on quarter and 4.3% in Q4 2020. We also have initial jobless claims, which are expected to fall to 515k from 547k. And then at 3 p.m, we have US pending home sales. So plenty going on the calendar, both macroeconomic and corporate. So good luck today if you're trading. Steve, you got anything else to add?
No, that's it. That's it.
Lovely.
For us.
Cool. Let's wrap it up there then. We'll be back tomorrow morning. And until then, trade safe, everyone.
Cheers.
Bye-bye.